The global economy was drastically affected by the global pandemic that happened last year. Many countries are still finding their footing, and the economies of many different countries are in different stages of holding together and trying to work its way out in the aftermath of the pandemic. But something that happened that none of us really expected, and happened to a very large extent, was the rise and the holding on together of public markets. One institution that collects data from exchanges around the world and gives us a comprehensive view of what's happening in the public markets is the World Federation of Exchanges.
If we see at the market capitalization, we see that all the regions register an increase compared to 2019. And it is a different level of increase, but all of them end up the year with positive numbers compared to 2019. However, what is interesting, as you have pointed out correctly, I think, is that the markets very quickly regained confidence and rebounded to the levels that were pre-pandemic. And this, I think, shows us two things. One is that, well, of course, there was some diminishing in uncertainty as people understood better what was the impact of the pandemic and what were the perspectives for the rest of the year. But it's also an indication of how the exchanges and the market infrastructure in general proved to be resilient and maintain the confidence of investors and of all the stakeholders. In general, one of the things that we probably should be thinking about is what are the needs of the different stakeholders in terms of accessing markets. So clearly IPOs play a role there's a good reason for the listing process and the way they are structured, etc. But it's something that we maybe that we want to think about, whether there are other ways in which exchanges could bring other type of firms which may not be necessarily suitable or mature enough to go through an IPO process, but they may require a different type of funding structure. And I think exchanges have been thinking about this very intensively because, as I said before, the role as in transferring funds through the economy, it's relevant, and there's a large pool of firms that may not be, for different reasons, suitable for a IPO process, for a listing process, but they may still benefit from access to markets in a different way. So this is something that, different initiatives have been taken by exchanges to try to widen up or to provide service to a wider set of firms. And in this sense, what I take from the current increase in SPACs that you mentioned, what I take is just this is a symptom of the need of finding ways, or a symptom of the need of finding structures that could be that could fit different profile of firms. Now, there are many things. It's not an easy thing because, as you know, there is also the questions about investor protection, for example. That's a very important thing to take into account. And some of the comments I've been seeing in the press around SPACs points precisely to the fact that while some of these SPACs are reliable and trustable, there is the risk of finding ourselves in a bubble if we don't take care about how these instruments are structured and regulated. I don't think that cryptocurrencies are in competition with exchanges. I think exchanges perform a different role, and they are in a different space, both in terms of function and in terms of the role they play in the economy. I think that, cryptocurrencies are a new asset class with a recent surge in value of Bitcoin, and it is too volatile for many investment purposes. So I think it will be still needs time to really assess what will be the final role that cryptocurrencies will play in the economy, if at all. There are interesting and important implications for the way that, for example, monetary policy could be conducted if there is a strong digital currency which is used extensively in the economy. There are implications in other aspects. We shouldn't forget that we are operating in exchanges, settlement systems, CDS, depositories. They are cornerstones of the financial system because they are trusted and they need to be trusted. That's why they are heavily regulated, because they perform a critical function. So when you think about DLT, for example, and decentralized ownership, for example, from a purely technical perspective, you may think, well, it may work. Why not? All the nodes, if there's a trade, all the nodes validate the trade. There's no centralized entity to administer and decide which trades are good ones or not, but it's validated by consensus, etc. So we've seen different attempts, different ways of circumventing different problems. And I think that we're still facing a situation in which the core problems are not solved. And one of these is the fact that, as I was saying before, market infrastructures are trusted entities. So it's not easy to decentralize the trust. We need, just for example, in the case of depositories, they have the role, they are the notary of the system. We trust them because we know that the ownership of the shares is well kept by them, and there won't be any confusion or any loss of information, and that's why they are heavily regulated. We have seen that in many cases, blockchain and DLT are not necessarily offering the same type of confidence in the way they operate. And we have seen in reality that many of those efforts that were directed to replace some infrastructures by DLT or by blockchain technologies, more DLT, they have been struggling with many of these issues for a long time. But I think we're still far away of understanding really what will be the role that these technologies could play in the real world, where we have the need of trusted entities, the need of heavily regulated entities, because we need to protect investors and we need to have the trust of the stakeholders.